Thank you, Suyesha, for that. Good afternoon and welcome to the market closing on a brand new collab show between Business Today and India Today Television. It's 3 p.m. and we are here to share with you everything that you need to know about the market closing action. First up, let's take a look at what's hot in the world of corporate as well as the financial space. Sensex and the Nifty slip over 2.5% in this week as the markets extend their losses for the sixth consecutive session. Sensex falls 700 points below 81,500. The Nifty also slips below 24,700 mark. Mid-caps and small-cap indices drop sharply. All the sectoral indices are in the red. There's pain for the Indian pharma stocks as Sun Pharma, Aurobindo, Gland Pharma, Lupin and Cipla and many more tumble in trade. Most of these stocks are up to 5% lower in trade, especially Sun Pharma that's hit a 52-week low in the intraday session today. This is after Trump has slapped 100% tariff on branded and patented drugs. Pharma Exports Promotion Council of India, however, says there will be limited impact. Indian generics is seen as a cost-saving opportunity for the US. Supreme Court has cleared the JSW Steel's 19,700 crore rupee resolution plan for BPCL, also overturns its earlier judgment. Supreme Court rejects the pleas of ex-promoters, creditors, says IBC's turnaround goal has been achieved. Delays due to PMLA, not JSW. Waaree Energy's shares have fallen over 6% in trade. That's after the reports of US probe into alleged duty evasion on solar panels has been seen. Company says it has cooperated previously and will continue cooperating, emphasizing commitment to US manufacturing expansion. Festive car sales boom in full swing. In an exclusive chat with Business Today, Maruti Suzuki's Partho Banerjee has said 80,000 daily inquiries, 80,000 plus units sold since Navratri. SUV traction is stronger. Right on the top of the show, we'll straight away go on to the breaking news that India-US trade talks have taken center stage this week. Commerce Minister Piyush Goyal has led a delegation to the United States, meeting top officials and investors to discuss a potential trade agreement. Let's now go across to my colleague Karishma Sudani for the latest updates and details on the same. Karishma, over to you. What have you picked up?
Well, Sakshi, there's an official word that's coming in from India's Trade Ministry, and I'd like to just use the verbatim it is, which says of constructive meetings between Washington and Delhi. It's been around 2.5 months since we were told that there has been a seesaw of conversations, but finally when a positive, optimistic word comes in from the ministry, it signals of a potential early conclusion of a bilateral trade agreement that could come in well within this year. Now, sources separately have also confirmed us of the fact that the intent of conversations have been positive, and India's pitch has been clear on the fact that they first want the punitive tariffs of the 25% to be done away with, so that we at least come down the ladder of the tariff on the tariff card, and then the contours of the deal could be finalized, especially pertaining to the sticking points that have been existing for quite a while now. In terms of pharmaceuticals, my sources in the Trade Ministry are sharing that they are still studying it completely, but the fact that we have an edge over in our exports on generic medicines, it's likely that we are currently on the safe and a sweet spot when it comes to our pharma exports to the US. All in all, it looks like good news to begin with, and Minister Goyal has returned. India's chief negotiator Rajesh Agarwal also returned just day before yesterday to Delhi, and we are hoping that the sixth round of negotiations could take off any moment.
Okay, Karishma, keep an eye out on that development. We'll continue to take all those updates from you. Meanwhile, viewers, we'll just now focus on the markets. Remember, we are trading at the day's lowest point, 24,646 now. There's a 240 point of a decline on the Nifty, and there's been a swift slipping of the Nifty, especially in the second half of the trading session. Look at the Nifty Bank, that's also down by 1% now. All the sectors are down in the red. Look at India Wix, that's the fear gauge. That's up by 6.5% now at 11.4. That clearly shows that there is a lot of fear that's trickling into the markets at this point in time. There are just about a few handful names from the Nifty that are holding up: L&T, Tata Motors, ITC, Eicher Motors, Reliance Industries, Maruti. But all of these are also unable to really lead the markets to a recovery side. Let's go across to my guest now. Sudeep Bandyopadhyay joins in. He's the Group Chairman of IndiTrade Capital. Warm welcome to you, Sudeep ji. Good to have you with us. First up, help us understand, last weekend we'd heard from the US that they have got even the IT sector into the fold of tariff wars by implementing that $100,000 of an H-1B visa fee that led to a 2 lakh crore rupees of market cap of a wipeout in the last 5 trading sessions for the IT sector. And now it's the pharma space. We've been constantly waiting for Donald Trump. He constantly mentioned that he is going to be putting tariffs seen like never before on the pharma sector. And there you have it, 100% tariff announcement has come in, although limited to the branded and the patented segment right now. But it's definitely led to a sentiment beat at this point in time in the Indian markets. How are you looking at it, sir?
Well, you're absolutely right. I think Mr. Trump has been talking about coming after the pharmaceutical industry for quite some time. But having said that, I would say that the current pronouncement of the US president isn't that bad for Indian pharma generally. There will be impacts here and there, but the primary impact will not be much at this stage. But again, then you will have secondary and tertiary impacts. I'm actually worried on the CDMO players because somewhere around, when these are implemented, you may get to see that CDMO players are starting to lose business and opportunities because people will try and focus on doing a lot of work in US. I'm assuming these things get implemented because there are a lot of question marks on that. But assuming they get implemented, I think CDMO players may be in for some trouble in terms of future business and contract renewals. Other than that, at this stage, Indian pharma probably to a great extent is sheltered because they are not into branded so much. Sun Pharma will have some challenges. Maybe Wockhardt will have some challenges because it's still not clear what will happen to US-EU treaty because that caps the tariff at 15%. But whether it will be this pharma tariff will be over and above or it will get subsumed, one doesn't know. Because some of these, like Wockhardt, have facilities in EU which will export and which does export to US. So things have to kind of mature before we can take a firm view. But by and large, Indian pharma looks to an extent safe at this stage.
At this stage, it looks to an extent safer from this 100% tariff because it's limited to the branded and the patented segment. And what Sudeep ji has been trying to highlight is that out of the $10 billion or $10.5 billion of exports that go from the Indian pharma industry to the US, only $1 billion is exposed because of the branded as well as the patented drugs that are exported to the US. Rest of them are in the generics category, and so far there's not been any announcement of that. But it will be very difficult to assume that generics will be safe, in the future as well, because this could be one of the first announcements that, Donald Trump has done. How would you look at then that uncertain scenario?
Well, everything is possible with the current US administration. But I think, if and when that comes, that will be disastrous for US consumers. Of course, it will be a problem for Indian pharma companies, but it will be disastrous for US consumers. Roughly, 40% of US generics which gets imported into US comes from India. And if there is a significant tariff, there will be cost escalation, which will in some form or the other get passed on to the consumers, which is not good for US. So I'm not sure that's going to come, but you can't put anything past this administration.
Absolutely. Hold that thought there, Sudeep sir. I'll come back to you. We're also joined by Vishal Manchanda, Senior Vice President, Institutional Research Systematics Group, on the phone line. He is with us to talk to us about how significant is the US market for Indian pharma exporters and what portion could directly be hit by this 100% tariff. Go on, Vishal. Good afternoon to you. Tell me, how have you assessed the impact?
Yeah, hi, good afternoon. So, India exposure to the branded market in the US is about $900 million, and the primary company exposed to that space is Sun Pharma. So now if you look at the 100% tariffs, I think what happens here is, I think what's also important is where is the drug manufactured. So if you look at Sun Pharma, they manufacture most of their patented portfolio from Europe, US and Canada. So I think what we'll have to understand is what tariffs will be applicable to the portion of drugs manufactured in Europe, portion of drugs manufactured in Canada. And again, so there's more details we need to understand around the tariffs as to whether 100. So my sense is what's manufactured in Europe will attract 15% tariffs. What's manufactured in Canada would depend on the mutual tariff rates between the US and Canada. And there are additional components to it. So I think essentially the tariffs get levied on the cost of sales, and the cost of sales is primarily, there are three components within cost of sales. One is the value of the API, value of the formulation, and the value of the IP.
So, Vishal, tell me, you just mentioned Sun Pharma. Is that the only Indian export-oriented pharma company that is likely to get impacted primarily with this 100% tariff? No other company?
So first, let me tell you, we might not see 100% tariffs getting applied on the Sun Pharma portfolio. We might see a lower tariff getting applied, and then it will be applied on the cost of sales and not on the sales value. So it's not going to apply on the $900 million, but it's going to apply on at what cost Sun Pharma sells to the US subsidiary.
Can you give us an assessment of what could be the impact on revenues and margins for Sun Pharma?
Our best estimate, we don't have the full details on what is the cost of sales and how it is divided between the various. How much of the cost of sales is coming from Europe, how much of it is coming from India and other markets. So, but our best estimate is 1 to 3% of EBITDA can get impacted.
Fair point. What are the opportunities and the options available with the companies to offset this impact for those who may be now anticipating that there could also be a futuristic announcement on generics as well, even though our other market expert, Mr. Sudeep Bandyopadhyay, believes that that kind of a step will actually be, a self-goal for the US government, because that will impact the US citizens the largest. So we are hoping that doesn't happen. But in case there is, what are the opportunities and options available for the Indian pharma companies?
I think for most part of the generic sales that India does to the US, we would have no choice but to pass on the tariffs to the US consumer. So we don't have enough margins to kind of absorb the tariffs. I think there's no, and again, probably if I look at the alternatives in terms of other countries that can supply to the US in the same kind of replace the magnitude of supplies that India supplies to the US, we don't have alternatives as well. So I don't think US would have a choice there in terms of the generic.
Tell me, Vishal, one thing that I want to understand is this tariff purely a trade retaliatory move, or does it actually reflect even concerns like pricing or quality?
So I don't think so. It's broadly, it's in the same line as we have been seeing in the past. These tariffs are basically to ensure to get the trade deficit right. And so these are tactics to get that right.
Sure. Vishal, thank you so much for being with us and for explaining to us the impact that we could see. Sudeep, coming back to you to help us understand, these fresh kind of imposing of the tariffs that we are seeing, will these also cast a shadow on the ongoing talks that we have been having? Before you joined in, Karishma was talking about the delegation led by our Commerce Minister to the US for progressing the talks, and there are hopes that the 6th round will come in. Will these kind of tariffs also cast a shadow on the progressive talks that we've been having?
Well, I think this will be one component, but I think this is a small component. I think H1B visa fee is a bigger component as far as India is concerned. Also, the other issues which I understand are being negotiated hard is the agricultural products, dairy products. I think these are more important at this stage, is what I believe. Because there are certain red lines which India would not like to cross, and US has taken a position where they definitely want India to accommodate on some of these issues. I think the challenge is there. There are so many moving parts as far as US tariff and policies are concerned these days that it's very, very difficult to predict with certainty what's going to happen even tomorrow. So let's wait and watch how things pan out. But having said that, I will mention, Shakshi, that India-US trade deal is not a done deal. It's not an easy job. I think it's going to take time. The Commerce Minister has been expecting that by fall the agreement will be in place. I think it will be excellent if that is in place. But I
Right.
have my doubts, considering the number of moving parts and number of issues which attract friction. It will be a miracle if it is done by fall.
What would you do as an investor, Sripji, on sectors like IT and pharma that have been freshly imposed with the newer impact of the decisions that have been taken at the Trump administration?
Well, Sakshi, I've been talking about this for quite some time, even before
Yeah.
that. Yesterday's development happened, or even H1B came in. As far as pharma is concerned, I've been saying that domestic pharma industry is growing at 25% CAGR. Focus on companies having significant domestic business. So, I've been talking about Mankind Pharma. I've been talking about some of the other pharma companies having significant domestic exposure. We should look at that as far as pharma is concerned till things settle down as far as US is concerned, because US is definitely the largest market for Indian pharma companies who are into global businesses. As far as IT is concerned, I have been again talking about focusing on niche IT companies because, let's say travel and tourism is growing rapidly globally. And let's focus on companies catering to travel and tourism industry. Let's say RateGain Technologies, Coforge. Let's focus on these companies because the scope is huge and it's continuously expanding. Similarly, there is a massive transition happening in the automobile industry from ICE engine, internal combustion engine, to EV. And this transition requires a lot of technology support. And some of the Indian mid-cap IT companies are providing that technology backbone, whether it's a Tata Technologies, whether it's a Persistent Systems, and many other companies. So now this is a huge, humongous job, and it's happening all over the world. Let's focus on these technology service providers. I think we will do well doing that. See, as far as large cap IT companies are concerned, the challenge is AI is real, and US corporates will insist on use of AI to deliver services, which will erode into the margins of Indian IT companies. So maintaining margins will be a challenge. Improving margin will be a challenge for large cap Indian IT companies providing general IT services.
Fair point. Let's also listen into what Mr. Sudarshan Jain, the General Secretary of Indian Pharmaceutical Alliance, and Namit Joshi of PharmExcel had to really say about the 100% tariffs on the pharma industry as well.
Applicable to patented branded products manufactured outside US. It is not applicable to generics. And India supplies mostly generics product to US. India exports around $10 billion medicine to US. They consist primarily of generic products and APIs. So India is not likely to be impacted with this order.
This is more related to patented and branded products, wherein India exports large part of the generic pharmaceutical products into US. So we don't find much of an impact being experienced into this particular category of the product what we export into US. So in nutshell, what I can say is that still till date, Indian pharmaceutical supply chain resilience continues to be there for US, and we continue to make US save more than $200 billion every year by virtue of exporting low complex, simple, affordable generics into their country.
Well, the Indian export-oriented sectors are looking at this uncertainty looming large and dealing with it. It's the domestic-facing sectors that are actually cheering the festive cheer back home. In fact, India is gearing up for this 3 lakh crore rupee consumption boom with GST and income tax cuts along with RBI rate cuts, as experts are calling it as the Lollapalooza effect. This trifecta is expected to fuel discretionary spending, boost demand in rural and urban markets, and also create opportunities for investors in the consumption-linked sectors as well. Let's come back to understanding from Sudeep. How is he looking at the first 3-4 days of how the festive season is kick-started? We've already been hearing from a lot of sectors that record amount of demand, buying is already being seen. How are you looking at it as an opportunity for investment, Sudeep ji?
Well, I think the automobile industry is definitely cheering, and we have heard about the record number of orders and inquiries which Maruti is getting, and some of the other automobile manufacturers are getting. So yes, I think there is a significant traction in the lower end of the market. And remember, this is what was missing, particularly for a Maruti or a Hyundai. I think there was a massive slowdown as far as lower end of the market was concerned, and that this was leading to a lot of challenges. Now that segment is showing significant traction and significant amount of excitement. Maruti has gone ahead and launched multiple schemes and newer products as well to entice the customer even further. So I think they are in for good days. So Maruti has been our favorite, and we believe that even at current valuation, prices have moved up since the GST cut was announced. But even at current level, Maruti looks good from a 1 year plus kind of a new investment horizon. We have been liking M&M, and we believe that there may not be that much of excitement around that counter because of GST exemption, GST relief. But I think M&M can be looked at. As far as consumer durables are concerned, we do like Blue Star. I think it's doing a great job in the premium end of the market. And of course, consumption boost does help air conditioners. There were lull in sales because of early onset of monsoon this time, and they didn't get the kind of summer sale they were expecting. But I think things will start picking up in the festive season. So overall, I think the consumption demand should pick up with rainfall being good, interest rates having come down, companies coming out with new incentives, and of course, on top of that, the GST benefit which has been passed on.
Absolutely. Since you've been talking about Maruti Suzuki, in fact, we had Maruti Suzuki's management with us on Business Today. In fact, festive car sales are revving up probably like never before. Maruti Suzuki is actually seeing a huge rush with over 80,000 units sold since Navratri's day one, and daily inquiries have also been pretty robust, from attractive EMIs to strong SUV demand. Here's what Partho Banerjee, Senior Executive Officer for Marketing and Sales at Maruti Suzuki, said on the festive boom.
Beyond the festive rush, of course, we are coming towards the end of the month. What kind of numbers are you looking at when it comes to month-on-month growth? And of course, how does the year now look like? Just a preliminary idea, sir.
Chetan, it will be too early for me to give a forecast for the next month and this month, because right now the challenge is to meet the demand which we are getting through our dealers, because the dispatches were stopped in the first 20 days due to the GST. The dispatches have started only from the 22nd of September. So many vehicles are right now in the transit. We are trying to see to it that we are able to deliver the vehicle as quickly as possible.
And do we expect some kind of a delay? Because, of course, logistics issues do come up when it comes to delivery of vehicles from the OEM side to the dealership side.
See, one thing what we are seeing is in some of the variants, the bookings, the rate in which it is coming, it is, I would suggest through your channel to all your viewers, please book your vehicle right now. Otherwise, there could be a little bit waiting time on some of the variants.
Okay, there you have it, and robust queries as well as a robust season that it is panning out to be for the auto sector that had been facing a lot of headwinds for quite a long time. There's finally some good news that's pouring into the numbers, and the industry is also pretty buoyant on the same as well. A minute to go before the market shut shop, so let's quickly focus on the closing of the markets, and we'll come back to our conversation with Sudeep ji, and of course take some viewers' questions also right after that. So the Nifty is hovering 222 points lower in trade. We've just seen slight pickup from the low point of the day, but still slipping below that 24,700 mark at 24,668 to be precise at this point in time. All the sectors, they close into the red in today's trading session, with IT having lost the most now, almost 2.2% of a decline that's coming in on the IT pack, led by, of course, followed by the pharma space that's also down by 2.2% in trade. So both IT and pharma, the export-oriented sectors, have definitely taken this uncertainty globally on the chin. Consumer durables have also come under some selling pressure, almost a 2% of a decline on that one. Broader markets also, mid and small caps have also given into the bear grip today. Look at it, almost a 2% of a fall for both these indices as well. Metals that were shining bright from last couple of sessions have also seen some profit taking. We're also looking at PSU banks coming into the profit taking mode. Autos, financial services, FMCG, all of them down. It's actually the only index that's in the green is India VIX. That's the volatility index, 5.2% higher at 11.3 odd levels. So keep that in mind. A few handful of 6 stocks on the Nifty managed to stay into the green towards the end of the session. L&T, Tata Motors, ITC, Eicher Motors, Reliance Industries and Maruti Suzuki that managed to gain ground. But on the lower end, you saw IndusInd Bank, M&M, Eternal, Tata Steel, Bajaj Finance, Sun Pharma as all those stocks that dragged in trade today. So that's how the markets have truly shut shop at. Let's go back to our conversation with Sudeep ji. Sudeep ji, how and when will we see the markets? And could you also help us understand when it comes to the outlook as to when do you see the recovery happen, and will it only begin once the tariff talk has been solved?
Well, as I was mentioning earlier, Sakshi, I'm not so convinced that the tariff issues will get resolved very soon. It will take time. As far as Indian markets are concerned, if we want to focus there, RBI credit policy is around the corner. If there are some good announcements in the RBI credit policy, that may kind of charge up the market, particularly for the rate-sensitive segments, and BFSI may start leading the rally. Overall, I think consumption demand is increasing, which is leading to credit demand increasing, and that's good news for the industry. And the asset quality is also improving for the overall industry. Leave aside some unsecured segments. So overall, I think with little bit of support from RBI, BFSI can start leading the market. The second segment, which I am also enthused, is this entire consumption theme, and particularly consumer durables, automobiles, two-wheelers. I think the monthly numbers will start coming, and that will give a very clear indication of how things are panning out for these companies as far as demand is concerned. And that may again excite the market. It may start even next week itself when we start getting numbers from these companies, business updates and numbers from these companies. So I would rather focus on these cues than wait for the big announcement on the tariff deal.
Absolutely. So, Sudeep ji, we have some questions for you coming in from our viewers. We'll take a couple of those. Satyam Sharma from Mumbai wants to know from you, sir, that he's heavily invested in the pharma space and the fall in the short term. Should he worry? Should he sell the lot, or should he continue to hold them? What would your advice be?
Well, I would definitely advise him to hold. There's absolutely no point to panic and exit. As you've been hearing from myself as well as many other experts on the channel, that the impact on Indian pharma company is very, very limited. So please don't panic. There's only one company to my mind which is directly going to get impacted is Sun Pharma, but I'm sure they will figure out ways and means of minimizing the impact also.
Okay. So, Deepji, one last question for you, and this is from Prasoon Shah from Vadodara. He says, coming in the festive season, I'm hearing that a lot of IPOs are coming in, big ones like LG, PhonePe, Tata Capital. So, should I save my funds for that? And which one would you really prefer coming in?
No, all these are good IPOs, good credible companies. If you want to go for new generation platform companies, PhonePe is definitely worth looking at. If you want to go for the traditional businesses, Tata Capital definitely is a well-established NBFC with a credible track record for a very long time. So everyone has their positives, I would say. Of course, we need to look at the valuation at which they are coming. And, I think that's very, very important when you apply for an IPO, at what valuation you are getting in. So wait for the valuation to be announced and then take the call.
All right. Thank you so much, Mr. Bandyopadhyay, for being with us on the program and helping us with all your insights on the markets and, of course, solving some queries for our viewers as well. With that, viewers, it's a wrap on the Business Today show. And in case even you have some questions about investments, mutual fund queries, SIPs, stocks or gold-related questions, please do send them to us on the number that's flashing on your screens. And catch the Business Today show at 9 a.m. tomorrow morning for all the trade setup. In fact, on Monday morning with Abha Bakaya.